Will Greece retain the euro? By www.forexconspiracyreport.com. Down the last minute, Greek debt talks continued until a deal on the Greek debt crisis emerged. The New York Times reports the story. Greece agreed to a deal with its European creditors on Monday after long and bitter negotiations, swallowing substantial new concessions in the face of imminent financial collapse and insistent demands from Germany and other countries that it proved it was worthy of a third bailout in 5 years. The agreement, announced after a contentious all-night session among leaders of the 19 nations that use the European common currency, requires Greece to move quickly to adopt a host of economic policy changes and to allow close monitoring by Europe and the International Monetary Fund. The issue always seemed to be whether a deal would emerge that saved Greece from a continuing economic downward spiral or saved money for its creditors. Proposals to write off part of Greece's debt and to inject a short-term stimulus in the 30 billion euro range are possible. It would appear that if its parliament agrees to terms, Greece will retain the euro, stay in the European Union, and hopefully pull itself out of its long-term dilemma. How is the euro doing? Folks may be generally pleased that Greece will retain the euro as it gets another infusion of debt relief, but the euro fell on the news according to MarketWatch. The euro fell against most of its major rivals Monday after Greece reached a long-awaited bailout deal. Fundamentally, what's moving euro-dollar is an accommodative central bank in the European Central Bank and a hawkish central bank in the Federal Reserve, said Craig Earlham, senior market analyst at Oanda, noting that Fed chairwoman Janet Yellen said Friday she expects a rate hike will be needed this year. Reaching a deal removes one of the key risks that could have possibly delayed a rate hike by the Fed, said Earlham. There was always the possibility that as soon as the Greece deal was reached, then focus immediately starts to shift elsewhere in the currency market. The prospect of an interest rate increase in the U.S. benefits the dollar. Meanwhile, the possibility of monetary support from the ECB beyond its September 2016 target to end quantitative easing is a drag on the euro, Earlham said. The U.S. dollar index, DXY, plus 0.68%, a gauge of the dollar's performance against 6 other currencies, rose 0.3% to 96.36. Interest rates are a major driver of forex exchange rates, and lower rates in Europe coupled with a rate hike in the USA will drive the euro down. Will Greece retain the euro? That appears to be the case, and a cheaper euro may be part of the price. Slower growth all around. As Europe gets its house in order and Greece appears ready to retain the euro, the global economy is set to shrink. According to CNN Money, the International Monetary Fund is predicting that the world economy will slow a little this year. The IMF expects the global economy will grow by just 3.3% this year, down from its previous forecast of 3.5%. That means growth will be even slower than in 2014, when global GDP rose by 3.4%. Who is to blame for this weaker outlook? The IMF points the finger squarely at the U.S., where a contraction in the first quarter also dragged down Canada and Mexico. The IMF blamed one-off factors such as a harsh winter, port closures, and reduced investment in the oil industry for the weaker U.S. activity. As Greece retains the euro, the U.S. economy is picking up steam, and growth will be back to about 3.8% next year. Interest rates will go up in the USA, and the dollar will rise against the euro. For more insights and useful information about trading foreign currencies, visit www.forexconspiracyreport.com.